What's up guys, welcome back to the channel. Today let's talk about supply and demand levels. We trade from supply and demand levels, some trade from other blocks, and you see a lot of people trying to trade from fair value gaps. But today we're going to talk about supply and demand levels, the right supply and demand levels to trade and the ones to avoid. If you look at this particular setup, this setup was from our VIP community and it was shared to our free community on Telegram. So if you have interest in joining that Telegram, the link is in the description. Now when this setup was shared, we had 2 points of interest. Firstly, we had this zone right here, and secondly, we have this one. Now when price mitigated this supply zone, you see the demand zone failed to hold price, and someone said I should explain why the demand zone failed to hold price. So this is what I'm going to explain in today's lesson. I'm going to explain why some supply and demand zones failed. There are actually different reasons why demand and supply zones failed, but in this case I'm going to explain why this particular demand zone failed to hold price. So before we do that, we're going to start from a sketch. Okay, we have a sketch right here, so we're going to use this sketch to explain further. Now, you being a supply and demand trader, you should always understand what structure means. That is what we call structure while looking at levels we trade on the price charts. Now, if you're looking at this particular price action right here, what you're basically going to notice is that if you look right here, you're going to see that we are in a bearish trend right here. And if you try to mark your zone over here, you're going to see that this is the right zone we're going to look at. If you're looking closely, you're going to see that this is actually a very good zone if you're looking to trade. But what you can see is that we broke a structure right here, a break of structure to the downside. We had a little pullback right here, so these are break of structures to the downside. So seeing this alone, this helps you understand that price is in a downtrend. We are trending to the downside, right? Now at this point, after we had this most recent break of structure, you're going to notice that this is a market structure shift here on the 2 hours time frame, because this analysis was actually shared on the 2 hours time frame. Now when we had this shift of structure, you see this is why we decided to mark a zone right here. This is a very good zone if you're looking to trade from this particular zone. It's a very nice demand zone. But now where a lot of people make mistake is when they stick to one single time frame, because if you're actually looking at the 2 hours time frame, this is exactly what you're seeing. Okay, if you look at the 2 hours time frame, you see price was actually trending to the downside. This is a trend to the downside, and when they see this, they're going to see this as a shift in market structure. But this is not actually a perfect shift. Why is it not a perfect shift in market structure? This is just the 2 hours trend. If you try to look at the daily time frame, if you try to look from the higher time frame, you're going to see that this shift of trend you're looking at on the 2 hours time frame, this was just only a pullback on the higher time frame. So when we identified that the higher time frame was about to pull back, what was our expectation? Our expectation is that we're going to get an entry from this level to trade back to the supply level. Then we're going to look to continue with our higher time frame bias and our higher time frame order flow. Okay, so this was our expectation. But in this case, when we had this shift in structure, what price did was that it was not able to get to our zone, because you see price only came very close to our zone without mitigating our zone. Now what price did is that it continues to break internal structure, and finally we had a mitigation of the higher time frame zone. You see, in this case the higher time frame supply zone was mitigated, and now price was reacting from a higher time frame. Now when price was reacting from the higher time frame, I don't think there is any need to trade from this supply zone. And I remember during when I share trading opportunities with write-ups on our Telegram community, I will always tell you that if price mitigates the key level, that is the higher time frame key level, you should look to disregard this zone. But in this case, I didn't actually do that. I didn't actually say that because I was expecting, okay, you all should understand that. But this particular person that was asking this question, I think he doesn't understand that, or maybe he's actually new to our trading system. So what you should understand was that this particular level here is just a lower time frame level for us to trade the pullback into the key level. So since price was not able to mitigate the lower time frame level and it mitigates our key level, what are you going to do? You're going to look to disregard this zone, because price will always have stronger movement from higher time frame zones, because this zone is from a higher time frame, and the higher time frame we're actually talking about is the daily time frame, which has one of the strongest levels on the price chart. Okay, so what we see was that price react massively to the downside, and when it was reacting to the downside, what we noticed is that what this zone was able to do was it held price for some time before it failed totally to hold price. Okay, now there were people, when I shared the results from this level, when I said, okay, we had good trade from here, price reacted from this level, some people showed me screenshots of them entering trade from this level, and I actually told them it's actually risky. Trying to trade from this level is very risky. That was my response. Okay, so this is why that level failed. So let me show you live example so you could understand better, and we're going to go to the higher time frames so you you'll see that better. I think I have 2 examples to explain further, so you understand why trading from a lower time frame zone is risky when price is reacting from a higher time frame perspective. So this is the 2 hours time frame, and this is still NZD/USD, and we're going to use it for this analysis. So we explain further, you're going to understand the zones to trade from and the particular one to avoid. Just like I said, there are different reasons why zone fails, okay, but I'm going to explain this particular one, why it failed, and I'm going to show you a couple of examples to explain further so you understand why. Okay, now looking at this, you're going to see that we're actually in a downtrend. You see NZD/USD is on a downtrend on the 2 hours time frame, and what you can clearly see if you try to mark your zone is that this is the level we were looking at. This is the zone we were looking at on the 2 hours time frame. If you're actually paying attention to this 2 hours time frame zone, this is actually the level we were looking at, right? And what you can clearly see is that this is a very nice zone, because you see price moved with momentum to the downside, which breaks this structure right here. You see it took this structure right here, it broke below this structure, and you see this particular zone swept liquidity. And there are some zones I do mark which didn't sweep liquidity, and people keep asking, why is there no sweep of liquidity? And what I have to tell you is that I do trade zones that doesn't sweep liquidity. What I did on that lesson, I talked about liquidity pattern, is showing you my best kind of zone that have yield good results in the market. That was what I basically did on that lesson. Okay, so it doesn't mean that I don't trade zones that doesn't sweep liquidity. Zones that doesn't sweep liquidity still have high probability, especially when we talk about a range created demand and supply levels. Now in this case, you see this zone was able to sweep this liquidity, and you see it was a very good zone looking at it from the 2 hours time frame. And at this point, you see we had a market structure shift right here. You can clearly see we had a market structure shift right here. You see price broke below this low, and after that, this is where we got the shift in market structure. So when we got this market structure shift, what I basically did was to mark a zone, and this zone we marked right here. What is the aim of this particular zone? The aim of this particular zone is just to trade the pullback, and the expectation is that price is going to come, mitigate this zone, and a continuation to the upside. But if you look at this from the higher time frame, let's go to the daily time frame. So this is the daily time frame right here, and what you can clearly see is that the daily time frame is in a downtrend, and you see we have this level right here, and from what you can see, this is just one leg of price. You see price pushed to the downside, we had this zone right here which you're looking to trade from, and a continuation. Now once price have made this kind of move, what is going to be our expectation? Our expectation is that we're going to have a pullback. So since we are expecting a pullback, after this pullback, our expectation also is that price is going to continue with the downtrend, right? This is our bias, and this is what we're seeing in the market. Now going back to the 2 hours time frame. Now this is the 2 hours time frame, and we have this particular zone right here. Now what is the aim of this zone? The aim of this zone, like I said, is just to trade the pullback into this level. Now what you have to note and what you have to understand is that if price mitigates this supply level first, you're going to look to disregard this zone, and if price mitigates the demand zone before tapping into the supply zone, you can look to trade from your supply zone, because this is a higher time frame level right here. Okay, so let's press price forward and see. And you see price moves away without mitigating our demand level, and it's very close to our supply zone. And what you see, price mitigates this supply zone, and you see how it's massively reacted to the downside. Now price finally came to mitigate the demand level, and you see a lot of people were actually entering trades at this demand level without knowing that price is actually reacting from the higher time frame level, and this zone right here has low probability of playing out. Now if you try to press price forward, you see they actually got retro reaction to the upside before the zone failed. You see the zone failed to hold price. Now this is what I want you to understand. If you're trading from a higher time frame level, have it in mind that any lower time frame zone has probability of failing. Okay, so just like the setup you have right here, let me show you a second example to see if you understand better. So this is the second example right here, and this is actually on the 2 hours time frame. Now if you're looking at this from the 2 hours time frame, what you're going to see is that we were actually in an uptrend from this area. You see price was actually trending up. Now at this point we had a shift. You see price closed below this low, and after price closed below this low, you see we had a pullback, and the pullback price went to mitigate this zone right here. You see we had a mitigation of this level and another continuation to the downside, which was able to break below this level, which tells you okay, we actually in continuation of the downtrend. Now I also shared this particular setup. You see we had this range right here, and we were actually looking to trade from this particular price range, right? Now this range is our higher time frame zone. If you go to the daily time frame, you're going to see it better. But at this point, we also had a shift in market structure. Okay, you see price gave us a shift of internal structure, and when we had this shift, I also shared this setup, I think, to the VIP community. We had this zone right here which we are looking to trade from. We had a lower time frame level right here. Now when we had this zone, we have 2 points of interest, which is the strongest right here. The overall market trend is bearish. We are in a bearish trend, so this supply zone right here is the strongest level. Why are we marking this demand level? If price mitigates this demand level, if price comes back to mitigate this demand level, right? If price comes to mitigate this demand level, we can then look to trade to this upside. Okay, but if price fails to mitigate the demand level and mitigates this supply level first, we're going to disregard this demand level, because price is actually coming from a higher time frame point of interest, and there is possibility that the demand level is going to fail to hold price. Why? Price is reacting from a higher time frame point of interest. So this is why multi-time frame analysis is very important. You also help to understand price across different time frames. What you are trying to trade right here is a pullback. Okay, this level right here is a pullback, and we all know that pullback setups is actually kind of risky. Nothing is more favorable in the market than trading with the trend, right? Now praying price forward, you see price came very close to our level without actually mitigating our level, and you see how price reacts to the upside. Okay, if I actually included this level while marking my zone, I think we actually tagged into this trade, but I didn't actually include the level. I used a refined zone in this case. That's why price was not able to mitigate my pullback zone. And you see price ranged a little, and finally it mitigates a higher time frame zone. Now price mitigates a higher time frame zone. What are you going to do? You look to disregard this lower time frame zone. Don't look to trade from this zone anymore, because price is actually reacting from a higher time frame level. Okay, and you see price starts to push to the downside. And as always, once price comes back to this kind of level, we're going to have a little reaction. And from what you see, we had little reaction before the zone failed to hold price, and you see price continues to push to the downside. So this is what I need you to understand, that once you trade in, have it in mind that the higher time frame levels will always be stronger, and it will hold price compared to the lower time frame level. And you see price continue to push to the downside from that particular area. Okay, so this is it about some of the right zones to select. At least this will help you understand why some of your zones fail. When you mark your zones, always look at the higher time frame to see what is happening, because it's very possible that you might have a zone you are trying to trade from, which is a very nice zone, but the moment price mitigates a higher time frame level, you see that your zone failing to hold price. Okay, I hope this makes sense to you, and I hope you understand exactly what I explained. So thanks very much for watching this one. If you have interest in joining our Telegram community, the link is in the description, and if you're yet to subscribe to the channel, consider subscribing to the channel. So thanks very much, and see you in the next lesson.